Kevin, you fund the architecture right now. And one of your peers, Jamie Dimon, really continued to beat down on it. He said very recently that Bitcoin and other cryptocurrencies are nothing but a decentralized Ponzi scheme.
Yep. So let me qualify my statements on this, because I'm an investor in JP Morgan as well. I have a lot of respect for him. He may be one of the most successful banking managers in the history of that sector. However, that was an uninformed statement. And it was not helpful at a time when we're trying to drive regulation through two different bills on the Hill right now. I, along with many other private investors, have been spending a lot of time in Washington on this. Essentially what Jamie said there, he was talking his book. This is my interpretation. He feels threatened by some of this technology, particularly around payment systems, because banks make money transferring assets. It's a cost of friction in the system. And one of the only reasons that I invested in Circle, and I'm an investor in Circle, I'm supporting their initiative, and I'm a big believer in what stablecoins can do, is it's time to get rid of that friction. And it's not important that banks be protected so that they can make fees from that friction. When you transfer the US dollar into the Swiss franc to buy Nestle on the Zurich exchange, these banks add zero value. There's no value created in ACH transfer fees. If we could use a stablecoin that was regulated and approved by both sides of that transaction, it would be more transparent, it would be much faster, it would definitely be more productive, but above all, I would save millions of dollars. And so would everybody else. I can't wait till we can do that, because that kind of innovation should be supported, and it is. And that's why we're all here. This isn't about, speculation on asset price. This is about reducing the fees of how the world's economies work. More transparent, more productive, completely auditable, regulated, but less expensive. So does Jamie Dimon feel threatened? You're damn right he does. That's a big part of how he makes money. There is a social mission here. That is a good thing, but it is not going to solve a different problem we have right now. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stable coins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions, zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum in there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization. That's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. The UAE, Switzerland, France. But the real money, the sovereign wealth capital, is never going to move against the SEC. Never going to happen. And the reason that occurs is that if you're a sovereign wealth fund or a country that's oil rich perhaps, you're generating $250 million every 12 hours. The only place on earth you can put that is in the S&P. The only way you can do that is by being compliant with the SEC rules. They are never going to make a move against the SEC in any way until these rules have been determined. So we are being kept out of institutional capital, and Bitcoin is not going to trade above $22,000 until we get policy. Interestingly enough, and this is a personal speculation, if this stablecoin transparency bill was passed first before the Digital Commodities Act, which is the other big initiative right now, and Jeremy, wherever he is, was the guy that got that done, it'd be like bringing Led Zeppelin back, and he would be the lead singer. Because if that happens, and if it happens, I speculate that all assets, all crypto assets would appreciate overnight by 10%, because it would signal the move for policy. So we should all support the initiative of everybody, you know, and there's other people involved in this. You shout out to Sheila Warren and Perry Ann Boring, who spent countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge with the government that we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. It's not scary. If you buy Microsoft for your office and you're typing on Word, that's software. That's a productivity tool. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost, much more productively. What's happening here in this last 9 months is we're scraping the patina and we're removing the idiot management teams out of the market. All these bankrupt ideas will not come back because they were tested and they didn't work. And that's an important way to build a nascent industry. So it's, the litigators will litigate over the assets and the lawyers will sue everybody, and that's okay, because now the remaining players are being strengthened by the fact they're still in business. They're able to raise capital to the extent they're doing that, and the idiots are gone. What's wrong with that? And I think we start now, even though we're in a crypto winter, at a much better place. And I think the fact that they even woke regulators up, you know, when you lose $60 billion, mind you, it was decentralized, so a lot of it was outside of the US, that's maybe good.
That's a good thing.
And look, you got to feel sorry for the pioneers that got the arrows in the back, but they were idiots, so that's okay too. I've put money in harm's way in crypto across now almost 50 projects and continuing to do so every week, because I'm in the camp that says in the next 12 months, something's going to break on policy. I think it's going to be the Stablecoin Transparency Act first, but that in itself should open the floodgates, because if you ask a big, let's just take a big Middle Eastern bank, I don't have to name the names, but they've got 5 million accounts with over $2 million in each one. And they want to just have access to a stable coin, Bitcoin, and one chain. And they want to offer that to their clients. They won't do that until there's regulation.
There's no compliance infrastructure at the moment.
And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So just like I would in energy or just like I would in tech. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. And so I think I'll do quite well.